Okay, can you guys hear me now? You guys should be able to hear me now, I think, just to confirm. Sorry for the delay there. Okay, good. Yeah, this is just some stupidity. Everything was fine on my end, but it seems that I had to go in on my streaming software and add the audio again. Honestly, not sure why. It's 2020. Nothing surprises me anymore. So, again, I apologize for the delay, the tech difficulties. Thank you for everyone who's being patient and who's still on. Thank you for joining. Thanks for coming on. Let's kick things off. One thing I want to touch on is, if you recall the prior market recaps, I have done 6 since the time COVID-19 really kind of took off and we really started kind of seeing the world change and shift beneath our feet. And if you've been on the lives before, I try and make them as eventful, as informative, and as simplistic as possible. And I, of course, never take any kind of political bias or only one certain side of the news spectrum, because we know all media, unfortunately, is quite a bit slanted, and this is kind of a counterintuitive to what news and media and informational media should be, which is unbiased. We've lost that. I think we've lost many things in terms of our daily lives and things that we come to expect. But one of the major things we've lost in the last few years has been the ability to trust and, I would say, depend on unbiased media source. So I always take things from a data standpoint and from an objective standpoint. If it's an opinion of mine, I make sure I tell you guys it's an opinion of mine. I don't try and push any viewpoint, whether it's political or any other. Okay, so let's kick things off. You guys have been very patient. I appreciate it. It's good to be back. I was looking back at some of the footage from the previous lives, and I was like, man, you could see from the first live, and here it is. I'm going to show you guys some data points from the past webinars. And the first webinar I did since COVID took off was March 7th. So you could see the 6 different webinars I've done since then, and they were all weekly, and I believe they were all on a Sunday. And you can see the first webinar I did on March 7th. And I'm highlighting cases here, all right? I'm just going based on the COVID cases, and I know I'm starting off with COVID cases because that's the main thing that we've been all talking about this year. How many cases, how many deaths? Don't worry, I'm not going to drag this topic out too long, but just bear with me. To give you an idea, all right, where we were when we first started the first live, okay, when this thing took off and when things really started changing, I started the webinars with saying, okay, guys, we're over 100,000 cases over the globally. And again, this data is from Worldometer. This is not from CNN. This is not from Fox News. This is not from whatever else biased news media. This is from Worldometer, and Worldometer uses and actually shares all their sources. So of course I use that because it's legitimate, or as legitimate as can be. And when I look back and I realized, okay, look at the craziness in the 6 weeks that I'd been doing those webinars, these lives. Just take a look at the exponential insanity in cases and deaths. And I just saw that, and I just had to stop what I was doing. I was just like, I gotta log this. I gotta log this and show this, because this is something that I was going through. You could see in the videos, I'm locked inside. I was telling people, take this seriously, guys. I remember saying, we have to, at this point, do our part, I should say. We should do our part. And here we are. Where are we right now in terms of cases? Again, 2.4 million since the last time I had done the live. Here we are. July 19th, 14.6 million cases. I mean, it's just mind-boggling right now at this point. We also have had over 600,000 people die, and of course over 8.7 million recovered as well. And the mortality rate, as I'll show you, is just about 6 or 7%, as you can see right here. So total current active cases, total closed cases, you can see how many have recovered, 8.7. You can see how much currently, current had mild conditions, how many are in serious conditions right now, and how many total deaths, right? Below, I've also kind of checked off the 7-day moving average. All right, take a look at the increase in the cases. What's happening with the daily deaths here? Are you seeing this? We had a slowing down of the curve. All right, this is what we wanted. Now look at it turning over. This is a key point. Remember, I share everything for a reason. It's up to you to take what I say and see whether you want to run with it or not. I never force people's hand. I never force an opinion on anyone, but take a look at what's happening with the death curve. All right, remember, this is globally. What do we also know? That we just recently, I got an alert saying that the U.S. crossed, I think, 140,000 deaths, coronavirus deaths. So we don't have to look, across the pond. We don't have to go too far. We don't have to go, into some country whose name we haven't heard of. Just look at U.S. and maybe you're from the U.K., Europe, and your numbers are obviously different. Your situation is different. But just looking at, I'm not in the U.S., but I'm very close. I'm in Canada here for those of you that don't know, and you could see that, man, 143,000 plus deaths so far. And again, I'm not going to entertain any conspiracy theories of this is fake and people with heart attacks are also counting. Look, as someone who's had many health issues, I'm not going to go into the details. I can assure you the COVID pandemic, I'm very, very blessed and grateful that I didn't get it, and I hope I never do. But I can tell you, I've seen firsthand people die from this, okay? So I'm not going to entertain the fact that, this is fucking bullshit, this is all lies. Maybe you know someone that's died. I do. I know people whose relatives have died as well. So it just, the change just goes on and on, okay? You could see now the kind of seriousness is a lot different than when we were in March. Remember I said, guys, we need to shut things down. We need to be inside. We need to do our part. What happened since then? Exactly what, and I hate to say, okay, I told you so, because that's not the point of this. I don't want to be like, oh, I told you so. I don't want to be like, oh, I said the deaths are going to go up exponentially and that's what happened. No, I'm not here to vilify my opinion. I'm not here to say I was right. I'm here to say that, look, this is what we're dealing with. I'm not a scientist. I'm not even medically inclined to even have any idea how to approach this. Yet I can still say objectively that, we're not out of the woods. And this has been a life-changing 6-7 months. Let's face it. Many of you, or some of you know, maybe don't know, I'm supposed to get married this year. That got shifted. So again, these are first world problems, but ultimately, some way, shape, or form, all of us have been impacted. Okay, so always keep that in mind. Please understand that this is still something the world has to come to terms with and continue to move. This is now daily. It's part of our daily lives now, right? Not just the numbers and the data, but also the fact that, look, we've come to the point where, we don't know when the vaccine is going to come. And we know that, a lot of great companies are working at it at a simultaneous time. There's a lot of funding, and I'm hoping that we can get through this and get a vaccine soon, but don't be holding your breath for that. Understand that these things take time. So whether it's social, distancing or physical distancing, which is kind of the right word, or, wearing masks. And I know the whole mask debate still rages on. And if someone is politicizing the mask debate, I think every webinar I tell someone to go fuck themselves. This one is no different. If you're politicizing the mask issue, you can go fuck yourself. I don't care if you're a student of mine. I don't care if you are a member. I don't care who you are. If you're a liberal, conservative, if you are a Republican or a Democrat, if you politicize the mask issue, you don't want to wear a mask, that's a different story. You can't wear a mask, that's a different story. But if you politicize the issue, you can fuck right off. All right, and I just don't want to associate or assimilate with people like that. Just I make that very clear, because look, it's a fucking mask. Either you wear it or you don't. That's your choice. Do not, one way or the other, try and change your perspective in terms of, oh, okay, I'm right and you're wrong. Like, you got to be understanding that, look, we know that if it helps even 1% wearing one, that's 1%, it's kind of worth it. If someone who's 60 years old could potentially die, that 60-year-old could potentially be, a family member. So again, I stick with that. I'm very, very vocal in terms of a no bullshit approach. So if someone is offended by that, I don't care. And I stand by that, okay? I don't come up with my views. I don't force them on people, but what I do say is what I believe in. And if someone doesn't agree, they're fine to disagree, they're fine to leave, they're fine to go wherever the fuck they want. And I've always said that, I've always been this way. I was telling people from every social media channel, social media, any way I could reach out to people and tell them to take this seriously and do their part, I was doing. And I'll do that continuously, which is protect yourself, go out, have fun, but do it so responsibly. If this means physical distancing, if this means, wearing a mask for a little while, I'll tell you right now, I hate wearing a mask, okay? I hate wearing it, but I still wear it when I need to, okay? That's me doing my part. Do I need to all of a sudden, start being a spokesperson for masks? No one does. Just wear them, wear the goddamn thing, and be done with it, okay? Enough coronavirus stuff. Can you guys tell me in the comments if you guys are done with the coronavirus stuff so far? Because, man, I'll tell you one thing. I'm done looking at the numbers. I'm tired looking at the numbers. I'm looking at the numbers and sharing them with you guys now so you guys get kind of like that understanding where we are. I know this is all we're bombarded with nowadays, so I wanted to give you some clarity and understanding where the numbers are and where we are in the market. When we first started these webinars, oh man, I think we were right around here. Look, March 7th time, and man, it was like a crazy time, and the market just kept going lower and lower, and then really we hit that kind of low point on March 23rd. And of course, I didn't know it was going to be the low point. No one knew. But I remember getting on the webinars around here and saying, guys, around this time, and saying, guys, look, this is bad. Of course, this is bad. But understand that if you buy something that's down 30%, a company that isn't going anywhere, if it's Walmart, if it's, because everything was dropping during this time, everything. It's only later on did the markets think, okay, wait a sec, this stock is Corona proof. This stock actually does better during Corona time, which is Amazon and so on and so forth. So those stocks went up after the fact. But there was a time when they too dropped 20, 30%. And I was saying, guys, if you're an investor, this is a perfect time to utilize that capital. And if you were listening to me earlier in the year, in 2020, you would know I was saying, guys, look, start building cash, okay? The market is near all-time highs, getting to all-time highs right around here, remember? And I was like, start building cash. I did already. I didn't know it was going to be this. I wasn't knowing it was going to be this tremendous waterfall lower. I didn't know it was going to be a pandemic, but I did know that, I see more downside than upside. And that was the opposite of what I was saying here, because I said, look, we're down 30% from the highs, 35%. What we need to do now is start taking opportunities that are out there. And I said a whole bunch of companies, okay? Again, my elite members knew right away the stocks that I was talking about very specifically, but I gave some stocks like Boeing. I said, guys, look where we are. And I remember giving a buy on Boeing around 160, okay? And then it went all the way above 200. Many people exited around here. I'm glad they did, because I had actually some messages from people on Instagram and whatever, and they too kind of joined me in the position, even though they weren't an elite and they weren't a student. They had just watched these videos and they happened to listen and they did well, right? So it's amazing how it was kind of a great moment for me, because people were able to benefit monetarily from the market drop. And that's what I've always wanted, for people to take the opportunity to look at their situation and look at it from a critical and informative standpoint. And that's what we did with Boeing. We did that with so many different companies, right? There was an entire list I shared at this time point, right around here, okay, with the elite members, and said, look, ABC, XYZ, blah, 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 all these companies, okay? And I even broke it down by sector. I said, look, these are the ones that I'm buying. These are the ones you want to take. It's up to you to manage the position. But guess what? If you have the capital, you have the ability to take these positions and hold, I don't think you can go wrong. And that's what's happened, right? Take a look at just about any company, and you'll see some have obviously rallied significantly, and some have gone up. I think everything has gone up, unless it's like some garbage penny stock or something. It's all gone up since we first started doing these live sessions, right? So what does that tell you? A lot has changed. The market has moved on from coronavirus. So this is one thing I wanted to touch on. If I do one of these lives again, I will most likely not be touching on the coronavirus stuff. Why? Because as many of you in Elite are aware, and maybe some of you outside of the Elite and watching this, you know that the market has moved on from the coronavirus numbers. We know debts keep going up. We know cases keep going up. The market's factored that in and priced that in. What isn't factored in completely, or I believe isn't completely factored in, is a second wave that starts tilting that death curve I showed you in a wrong direction. We saw that death curve coming down, all right, the daily death curve I showed you, and then it started curling back up right now. That, I think, the market hasn't fully factored in. But guess what? When we were down 35%, and if someone was not buying at that point, okay, I hope it's no one on here, or if you're watching this afterwards, I hope it's not you. If you didn't buy a single stock because you thought this thing is going down more, and it's going down to negative 50%, or it's down, whatever the case is, if you were waiting for 2,000 in the SP 500, I mean, you don't have anyone to blame but yourself. Because guess what? Anytime you see a multiple standard deviation drop in the market in one of the shortest time frames ever, you do not let that opportunity pass you by. Period. I feel really bad for the people that had no life savings, no investments. They lost their job. They got laid off. Those are the people that got royally screwed. Part of it because it wasn't in their control, but part of it because it was in their control. They didn't do anything to be able to take advantage of situations. In fact, here we are in a pandemic situation where the economy's died. And what did I do? I bought a $350,000 car. Why? Not because I'm like chauvinistic or I like to rub it in people's face. No, because the world hasn't ended. And if you know what you're doing and you know how to do it well and right, you can do great in times like these. And I've proven that to people that were listening, that people are following us, that people that are on these webinars, people that are in Elite, people that have learned from me. I'm proving to them and showing them that forget the car. It doesn't matter. It could be anything. You could still have enough money to retire. You could still have money to put in your kids' college fund. You could still have money to take a vacation when things open up. 2 vacations, 3 vacations when things open up. You could still have money to not worry about getting laid off. These are all wins, and people are winning in different ways, even during a time like this. Okay? That's the point I want to drive home, that just because the world seems like it's stopped, then now it's gotten better. But remember, you don't have to look that far back. You just have to look in March and April. There was a very dire environment. In fact, I was getting on these lives and like YouTube lives, and I was very, very upset. I mean, you wouldn't see it, but I was upset. One number way you could see I was feeling an impact was my hair was going crazy. And I guess a lot of us were in that same boat. But really, you could see society crumbling, right? Our civil liberties being stopped. Not because it was anyone's fault, but because that was the thing we had to do. We had to not be able to even go outside was a risk. Meeting our family members and friends was a risk. Going to get grocery shopping, was a risk. Going to the beach, like some people were doing back then, was a risk. Some people decided to take that risk. Some people didn't, right? So enough about philosophy. Let's get back into the technicals. Where are we? Right now, you could see the market, I feel, is in a very tricky spot, okay? It's in this consolidation zone area. This is a big, big area. The 3,200 level and the 3,250 area is what I've really drawn the attention to our elite members. Obviously, some of you may not be aware if you're not in there, so you're hearing about it now. But be very, very wary of this level, okay? Why? We know that the market, if you're looking at it from a technical standpoint, this is potentially what's known as a resistance, okay? Now, am I saying the market's going to go lower from here? No. What I will say, okay, and I'm going to tell you guys, live and you could see if I'm right or wrong after the fact, that if the market clears above this in a very bullish way, I would not be surprised if markets goes to like 3,300, 3,350 next, okay? That's the next level, okay? 3,350, all right? But for now, we're not out of the woods. Do not think that, everything is great, everything's back to normal, because it's not. It's a lot better. So that's why the market is a discounting machine. It's already factored in the fact, look, coronavirus cases, we know it's going to go up, debts are going to go up. The hospital system isn't overwhelmed like we had originally feared for. It could have very well happened if we hadn't had lockdowns, right? So it's great that leaders across the countries stepped up and took that action. As I was saying, some countries did a better job than others, right? Some countries did a worse job than others. But ultimately, what we can say is globally, at least everyone kind of came together and said, you know what, we got to shut the borders down, no air travel, stay inside, let's shut these businesses that don't need to be essential. And I get it. I think it may have been a bit overkill, but guess what? At that point in time, no one knew. Did you want it on your head if someone came to your business and, God forbid, got COVID-19 and died? Did you want that on your head? No. So ultimately, if things need to be shut down for a month, great. It's not easy. It's not the best thing to do, but we had to do it so that we didn't, A, have an insane amount of people dropping dead, and B, the hospital system not being overrun. And at least we were able to get past that. So when the market saw that happening, you could see the reaction from that. That's what you're seeing. You're seeing that reaction. These prior arrows I've had is, I remember being on the live and saying, look, I think if we break below the 2,200 level, the markets can go lower to 2,000. That did not happen. Remember, I never say in absolutes because no one knows what's going to happen in the future. A lot of people pretend they do, but no one does. So I said in a very clear, concise way that, look, if A happens, potentially B can happen. If C happens, potentially D can happen, right? And that's what I laid out for people to at least be aware. Like, at least you have a compass, right? When things move, you change your direction, north, south, east, they'll change as you move. The same way the market, as the markets are moving, it's not a singular static thing. Everything is changing continuously, whether it's a weekend or a weekday, doesn't matter. Things are changing, right? So I never look at it, okay, guys, this is what's going to happen tomorrow because of this. No, it's not that clear cut. And if we look at it that way, you're going to be fooling yourself and you're going to be wrong more times than you're right. Okay? Just ask all the people that have been calling for a recession since 2009. Okay? These monkeys, miss one of the greatest rallies on this planet. It's the only planet that we're aware of that we inhabit. So really, they've missed one of the greatest rallies ever, okay? In my view, from March 2009 to now, they missed a 384% rally in the S&P 500. Important to understand. I always say keep things in perspective. So when you see this and the market went to 2016 levels, people are like, oh, it's 2016 levels. I'm going to wait till we get to 2009 levels. No, you're fucking dumb. You don't know what you're doing if you're waiting for 2009 levels. That shit's gone, man. That shit's gone. We're not in a financial crisis. This is a different type of crisis. It was. I think that's been averted. There's still some risk there, but the market is always right. The market is one of the greatest organisms on this planet that is factoring in tens of millions of different opinions, insights, and views, and trillions of dollars, and it's factoring that in and adjusting. It's the great discounting machine. It's factoring things in all the time. Company A, B, C, Moderna, if it's Inovio, if it's Novavax, whatever, if they have positive results, what does it do? The market rallies. It factored that in. The moment there's a negative factor, Moderna fails a trial, or AstraZeneca tomorrow is releasing some news on their vaccine, how that goes will factor into how the market moves and how these other companies work. So understand that the market is always factoring in upcoming and current news as it comes. The market right now is where it is simply because of what's occurred in the last 2-3 months. Okay, since we first started, when the markets decided to drop and tank, okay, in the beginning of March, that was a very critical situation. We knew that unemployment was through the roof. Do you want to know where unemployment is now? Take a look at this chart. Okay, now I'm showing you our data. Okay, unemployment insurance claims. Look at where we were in a span of, okay, from here, this is February lows, to this is about the March, where is that? April highs. Okay, it's April highs. Nearly 6.1 million people, okay, had filed for unemployment in a span of 2 months. Okay, you probably had seen this like graph that I'd shown back in March, similar to this, but this downward slope wasn't there. Okay, we've seen that now. We've seen the slope come down. We've seen the unemployment claims decrease and come down. What does that mean? People are getting back to work. Are we in the clear? Absolutely not. Because February, wow, we only had, a few thousand each and every week. Okay, all of a sudden you go from a few thousand to hundreds of thousands, and then now you're sitting at nearly total cumulative unemployment claims of nearly 6.1 million. That's a huge move. So things have been cooling down. You can see another reason why the markets have moved up. People are getting back to work slowly. Yes, there are some jobs that haven't come back. Yes, there are some jobs that won't come back. But guess what? The market is still trying to factor that in. Right? And this is what you're seeing. So this is the data, that you need to look at. You don't look at because some penny stock fucktard is buying some next, vaccine play, and you're thinking this is going to be the greatest thing on the planet Earth. No, you have to understand what the market is thinking and doing. You could do whatever you want, whether it's a penny stock or whatever, but do not fall for some simplistic narrative that, okay, vaccine equals we're all back to normal. No, there's a lot at stake. There's a lot going on, and not all of it just has to do with the vaccine. It has to do with many things. Okay, many things like monetary supply. It has to do with how much the Federal Reserve is stepping in with buying back corporate bonds. What is the kind of like the stimulus package, because there's a second one on plate, right? There's also some tax some talk about Trump administration wanting to do another tax cut, right? So these are all things the market is factoring in. If Jerome Powell, the head of the Federal Reserve in the U.S., tomorrow says we're stopping printing money, we're not buying no more assets, I guarantee you that the market will drop. How much? No one knows, but it will drop. So remember, it's factoring the policies of the Fed, who said that, we're insistent on getting through this pandemic, of this shock to the economy, and we are going to support it with whatever it takes. What does that mean? If you're reading between the lines, that means they're not going to let this thing tank. And you can see why the markets rallied so ferociously, so fast. And when this first happened, people were like, is this going to be like a U-type recovery, a V-shaped recovery, all kinds of different letters. And what has it turned out to be? Another V-shaped recovery. We saw this in 2018, okay? And I'm going to show you guys that again. And we saw this now. This is a V-shaped recovery. This is almost reminiscent of what we saw in 2018. Same thing, 2018, what I was saying, buy stocks. Start building that portfolio. Start utilizing that cash. I said this again this time. I feel like a broken recorder. Do not bet against America, at least not for the next, few years for now. Okay, the American empire isn't over yet. Okay, we know civilizations come and go. We know certain countries are dominant over some centuries compared to others. Okay, you don't bet against the American ingenuity. You don't bet against the American populace. You don't bet against capitalism. You don't bet against some of the greatest minds on this planet. Okay, they're all over the world, but you just don't bet against that when it comes to the U.S. And that's what you're doing. As an investor, what are you doing? You are investing in the American population. You're investing in the economy. You're investing in capitalism. You're investing in some amazing companies that are doing some amazing things. Okay, whether it's a pharmaceutical company, whether it's a tech company, so on and so forth. Okay, so moving back to the technicals, understand that where the market now is at a critical point. All right, it's a critical point. When we had this rejection here, let me look down here. So look, when we had this rejection here, the market dropped. That signified something. We had a recovery because we had some positive news with drug trials. If we didn't have that news, if we didn't have positive drug trial news, whether it's from Moderna, whether it's from Gilead, whether it's from whatever company, I assure you the market would be discounting that and also moving lower. Okay, so think about that for a second. We need to put certain narratives into play, factor them in, and then move accordingly. Okay, another thing I want to show you is look at the major drawdowns in the past. Okay, when you see this red line here, that's to signifies a 20% and up bear drop. Okay, in the index, that's a bear market. 10% is a correction. Take a look back to 2009 onwards. Okay, we've had many 5 to 10% drops. You can see that here, that big concentration of 5 to 10% drops in the index. We've had a few 10 to 20% drops as well. We had one in 2011. Okay, we had one in 2010. We had one, back in 2015, 2016. We had one in 2018. All right, and then of course we had one at the end of 2018, just starting 2019 with that 19.78% drop, which is ridiculous, and the market just came back up. And of course, this last bit, we had a 34%, nearly 34% drawdown from in the March, April months, and then huge recovery. And guess what? Do you know where the market is currently? I mean, you don't have to be a genius, but we are now flat year to date. Meaning, if you rewind it 7 months back to January 3rd, 2nd, that's where we are already. So the market has completely 180'd in February, and now it's 180'd again since middle of March, and now we're back in the market levels to where we were in the start of the year. Just, if anyone told me that in the beginning of March, I'd be like, fuck no, right? So even someone like me, even someone like Warren Buffett, okay, I mean, as great as he is, don't get me wrong, I love the guy, he's a legend, but even someone like Warren Buffett got it wrong, right? Very few people got this right. He sold airlines at the bottom, whether it's Delta, whether it's United, right? Okay, whether it's United, whether it's American Airlines, no matter what, Warren Buffett nearly sold these airlines at the bottom. And does that mean, he made the wrong choice? No. I'm just saying that, look, no one had traded or invested through a pandemic. Understand that if you had just started trading in the beginning of the year, or if you started trading in the 90s, okay, it doesn't matter. You're new to this no matter what. Someone like me had never traded through a pandemic, and here we are. I can say, again, I'm not trying to be smug or full of myself. I was able to get it right. Could I have got it wrong? Absolutely, I can be wrong. I'm wrong all the time. But unlike other people, I am willing to admit when I'm wrong, and I'm willing to learn from it and move on. Most people are too stuck in their own ways, for better or worse. And that's on them. But for me, I remember when I was buying assets, when I was buying stocks here, and it's going lower. Am I panicking? No. Then what am I doing? I'm utilizing capital more efficiently and buying here. Am I panicking? No, it's still going lower, and that's fine by me because A, I don't need the money. B, I believe in the system. C, I'm not betting against or fighting against American capitalism, the American economy for the long term. And as a result, if you had patience, or if anyone had patience and utilized their capital, well, guess what? You did miraculously. I don't care if you bought, really anything, just about everything, anything and everything has gone up, right? Whether you're looking at, there's many companies on my watch list here that I can bring up, whether it's Google, whether it's, many tech companies broke all-time highs, right? The NASDAQ went above all-time highs, right? Why? Because tech companies literally have come out better this year since Corona, since before, right? So J&J, look, still near their Facebook all-time highs, right? Look at the recovery. Things that dropped had no bearing on coronavirus. Facebook, it was down, from before Corona highs to here, about 30, fuck off TradingView, about 35, 36%. I bought some Facebook then, okay? It was right there in front of you for the taking, right? Whether it's Boeing, I'm not even talking about the airline companies, right? Like, you could have bought Disney, you could have bought Netflix, that just dropped in March, not too much, and then it just literally got roided up and it just went bonkers, right? Amazon. I said it back then and I say it again, Amazon is like, this coronavirus is like, again, don't start this as a conspiracy theory, but like, this coronavirus has been essentially like something that's occurred that has solely benefited one company the most, and that company is Amazon. And we're looking at it. This is a relatively $2,000 stock that has gone up about 30% or so since March, if I'm not wrong. Like, not from the lows, but let's say the beginning here. It's a 2,000 stock, about 30%, 35% now. Right, so there's so many different companies. Oil companies have kind of languished, right? Take a look at Exxon. Oil companies have recovered from the March lows, but they're languishing, right? Kind of like airlines now, medical, pharmaceuticals. Some of them are coming back. Pfizer's a great company, but I think there's more upside, right? Procter & Gamble doing great. There's so many different companies that are doing great things, and if you missed it, I'm not going to say again, I told you so, but just learn from it. Learn from it. I know some of you are wishing I put more money in. No, that's hindsight, right? That's hindsight. If you made money, great. If you learned something, great. Even if you lost money or you didn't make money, if you learned something, that's great. Okay, so moving on with the plan. Here is a chart of the different asset classes. On the top left here, we have the treasury yield. Okay, someone asked me about treasury yields and going lower, and I said, look, can they go lower? Absolutely. Can they go negative? Yes, but look at where we are now. I think I wouldn't be surprised if we see the treasury yields kind of holding around this time, around this level. To me, it isn't really. We look at treasury yields as an understanding of, is there more risk appetite or less risk appetite? That's the way you want to look at it. Not in terms of negative interest rates right now, but more as a factor of more risk, less risk. When yields go down and yields go up, that's an inverse correlation. So if we see treasury yields coming down, that means the price of treasury bonds is going up. People are being more risk off. They're taking risk off the table. Okay, so when you see around March level, look at this. Okay, when you see treasury yields going up, okay, that means price of treasury bonds is coming down. When price of treasury bonds is coming down, what does that mean? People are leaving risk-free assets. People are leaving secure assets, and it's going in the market. That coincides with the S&P 500 rallying, right? Whoops. That coincides with the S&P 500 rallying back in March, right? March 23rd onwards, take a look at what's happened with this, right? March 10th onwards, right? So, and then you see the yield curve flatten. Why has it flattened? Because of excess money printing, excess money printing, excess stimulus. Money becomes cheaper, right? If we saw the economy recovering, if we saw markets going up, and there was no federal, let's say from the Fed, we didn't see money printing, we didn't see all that kind of stuff, then I'm assuming that yield curves would have continued to go up because the market is factoring in a recovery. They're taking money out of riskless assets and putting into risk assets, which is stocks, right? So don't worry too much about treasury yield curves and all that stuff for now, unless you're really kind of a proficient macro investor. Now, gold since March has been on a tremendous rally. So like even in March, even something like gold was dropping. We know, and I've said this before, gold is like a safe haven asset class. People move towards gold as a hedge. People move towards gold because they think there's some intrinsic value to it, right? So even in March, gold dropped to as low about maybe $14.80 per ounce versus a dollar mark per ounce. How much gold price costs per ounce? So from $14.80, and it's just been off to the races, right? From a low of $14.80 in the middle of March all the way now we're looking at $1,810 per ounce in gold. Talk about a nice recovery in 4 to 5 months at 22%. Okay, in gold, right? It's not a stock. It's gold futures prices. Bottom right, U.S. dollar currency index. This is just the U.S. dollar compared against the largest different countries, whether it's the euro, whether it's the GBP, whether it's the Japanese currency, whether it's Canadian dollar, and then it just puts it into like an index and it measures. So we know that the US dollar got very strong in March. Look at that. So you're noticing the correlation, inverse correlation between different asset classes. Gold goes up during times when markets drop. Not always, but usually. The US dollar went up. Why? Because US dollar is like a safe haven as well. People are going into US dollars. They're converting out of different economies and different currencies that they feel are at more risk, right? You think people are going to get out of, Mexican peso and put in the US dollar when the economies are burning? Yeah, most likely, right? Because they feel like that's more of a store of value. So that's what we saw that back, in March, leading into April, and then we started seeing the U.S. dollar kind of weaken a bit again. So, I don't think we're going to see too much movement there. Last but not least, look at light crude oil futures. This is just the price of crude oil per barrel. Okay, wow. Of course we saw crude oil drop significantly. In fact, we know if you were watching the futures contract back in, I can't even remember exactly, but I think this was, look at this, here we are, this is the year to date, going negative, right, back in April. Okay, I've never seen anything like it in my life. No one has. I don't care if they're 100 years old or 110 years old or if they're 20 years old, they haven't seen a commodity like oil drop negative. I haven't, no one else. So that was such a crazy day, in April. But again, recovered very quickly, and here we are consolidating. Oil is consolidating. I had some positions in oil companies, oil as a whole, via ETFs at this point. And when it came to $40 a barrel, I said, you know what, I think we're going to see some consolidation in oil. So I exited. This was maybe a month and a half ago, and here we are, right? Since June onwards, we've seen some consolidation in oil, $40 per barrel. I think that's a fair price right now, a good equilibrium price for oil. Do I think that oil can't go any higher? No, absolutely not. I think it can. I think, we can go to 50, just not anytime soon, especially if we continue to see an increase in cases, if we continue to see a rollback in economies, maybe going back and shutting certain businesses down again, doing like a soft lockdown again, then I think, oil demand will not be back to where it's supposed to be. And again, if we see OPEC, right, the oil producing countries cut their sort of their plan for keeping oil production lower, if they start ramping back oil production, there's going to be more supply. So I think that is something you want to be aware of. I think oil prices can continue to move sideways. All right. Last but not least, here we have a look at the sector. Okay. the different sectors in the S&P 500. XLE is the energy sector. It's all the energy stocks in the S&P 500 index. And look at that. They're down 39% year to date. Okay, they were at one point down 60% as a whole. Remember, this is the average of all the different oil companies: Exxon, Chevron, ConocoPhillips, Occidental, all these kind of companies. They got decimated, and many of them are still decimated, but they recovered. Even companies like that recovered, right? Obviously, some smaller oil shale companies went under. That's why you have to be very careful in investing in any tiny companies. I don't care if it's oil. I don't care if it's biotech. I don't care if it's online business. Anything that's very tiny and is listed on the market, be extra careful, especially during the times like this, right? And then we have XLF. XLF is financials. Financials have been hit, right? Because if the economy gets worse, what sector has one of the most exposure to any and all businesses and the broader economy as a whole? Banks, right? Banks have their hands in just about every business because their loans, funding, line of credits to the individual consumer, but also different businesses, whether that business is an e-commerce store, whether that business is an oil producer, whether that business is running a brick and mortar store, whatever it is, the banks are very highly exposed to any slowdown or impact on the economy, businesses, and the end consumer, right? So that's why we saw banks also drop, but they too have made a recovery, but they're still down negative 22% for the year, right? XLRE, that's the real estate sector. Right, real estate dropped as well, just like everything else, but has made a nice recovery and now down about 8.5% for the year. Remember, these are real estate-based companies, REITs, real estate investment trusts, so on and so forth. Okay, XLU, utility sector, again down about 5% for the year. Not bad at all. Weathered the storm really well because utility companies are not going anywhere, and people go into utilities more as a defensive play on the market. They want to keep their money in the market, but they're not going to completely exit. So what do they put it in? They put it in companies that are defensive, that can outweigh and outlast a recession or economic drop. And that's why you see utilities still down a bit, but still relatively flat for the year. S&P 500 very close to flat for the year, down about 1% year to date. All right, XLV, that is healthcare and pharmaceutical companies, have actually done a little bit better year to date, right? About 3.5%. And then most importantly, you have tech. Tech has been the big winner in the markets, right? All large tech companies in the S&P 500 have mostly all rallied and rallied big. They've all hit all-time highs, right? Who would have thought, right? So for those of you that were ahead of the curve and thought, you know what? Tech companies, online companies are not impacted. Maybe they're down. You know what? I'm going to start putting money in. Kudos to you. You did a fantastic job because you got the timing right. You got the sector right. It doesn't get any better than that, right? So whether you ran this rally up till now or maybe you got out earlier, doesn't matter. You made money. You made the right decision and you stuck to your plan. Kudos to you. Well done, right? So that is where we are. Now, some of you are probably looking for simple answers, like where do we go from here? I think earnings is one big question mark, and I want to touch on that. Take a look at this earnings calendar that we have coming. This is for this week. Some huge, major earning plays coming in. All right, take a look at, Monday pre-market is not too hype, but look at Monday after close. We have Logitech reporting. We have IBM. Those are the things that I'm kind of watching. Those are the two that kind of pique my interest for tomorrow after close. And then Tuesday before open, we have Coca-Cola. We have I think that's Lockheed Martin. We have Novartis. That's going to be a big one, right? And those are the three that I'm watching. Of course, Philip Morris as well. After close, Snap. Snap is one to watch. I think it's way overvalued, way overdone. But again, it's another tech social media company that's come out well during this time. United Airlines. Look, we have airlines. The first airlines, well, not the first. Delta was the last one, but United coming in. That's going to be a big tell, right? Texas Instruments as well, TD Ameritrade. I guarantee you there's going to be more new account openings at TD Ameritrade in just about every brokerage since their last quarter, okay? So be ready for that. Doesn't mean the stock's going to go up, but just a metric to be aware of. They're going to have more account openings, more new accounts in the last 3 months than the 3 months prior, right? iRobot is another very speculative play, and of course, Interactive Brokers and Capital One. Biogen is another big one that I'm watching for Wednesday before open. Of course, Wednesday after close, we have the mother of all hype stocks, Tesla, and we have Microsoft, Chipotle as well coming in. Those are the ones that I'm mostly interested in to see how they go. And then Thursday, Twitter, AT&T, some of the airlines come in then. And then Thursday after close, we have Intel, Skyworks that I'm watching. E-Trade, again, another brokerage, so similar story. And then Friday, we wrap up with some kind of, Verizon and Amex, which we'll have to see. So a question I always get is, Riz, what are we playing for earnings? One thing I want to clear out is, right off the bat, understand that whether you play earnings by buying the stock or shorting the stock, or by using options, buying calls or puts, understand that if you're buying calls and puts, or if you're buying or shorting a stock for earnings catalyst, understand that there's no edge in that, okay? It's a 50-50 odds, sometimes worse than that even, okay? Depending on what you're trading. So don't think that, you have it down to a science, or you know how things are going to work. Unless you're an insider in the company, no one freaking knows what's going to happen with the earnings results, because that's insider information. Okay, it's not, unless something leaks or it's insider information, no one knows. And most importantly, we've seen this. We saw this with Netflix, okay? We saw that they had great subscriber growth, but they missed on EPS earnings. They beat on revenue, okay? Still, the stock price dropped immediately after hours, 10%, and then it dropped maybe 6% once markets were open. So doesn't mean just because something does decent or has good metrics that it's gonna go up. Netflix was actually a really big tell. When markets give you certain indications, Netflix is one of the biggest benefactors of this lockdown, right? I mean, not as good as Amazon and whatnot, but they've done great because people have been home. What are they doing? They're wasting time watching Netflix and blah, 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 subscribing. So their subscriber growth has been immense, but they still couldn't turn a profit for the quarter. That is telling you something, okay? Be very careful, because this earnings season is full corona. The last earnings season, we had partial. We had some months, 1 month about that was, during COVID, and then the rest were normal months. This quarter, for all the companies reporting the next couple of weeks, are all during fully coronavirus time. So it's something we need to be very cautious about. I would not be surprised if we see a pullback in companies that do well. They report good earnings, good results, but the price still drops. Why? Because many of these companies, especially tech companies, are priced for perfection. They're priced so heavily in terms of earnings multiples. They're priced so heavily in terms of valuations. Tesla is a prime example. Whether you agree or disagree with me, I do not think that, even if a company has great results, the price is going to go up 10, 20% immediately just because they had good results. I think a lot of it is baked in. So if I had to make a wager, I think there's more to lose, okay, for companies after reporting, whether they're good results or not. If they're bad results, the stock can drop even more. If they're good results, I still think the stock price could pull back a bit, because the market thinks, you know what? Wait a second, they reported good numbers, but not good enough for where the price is right now, where the valuation is right now. So then, people are going to start taking profits. When many people start taking profits, and then you combine that with some people shorting, what do you get? You get a pullback in the stock price. Okay, so don't be fooled into thinking, okay, earnings are coming, this company is going to do great because it's a tech company to the moon. No, this is where you have to understand market sentiment. You have to understand what's priced in potentially and what's not priced in potentially, right? So as I'm showing you this S&P 500 area, remember what I said. This is a very key critical area, 3250. Okay, it's kind of my area for the stock, for the index kind of being, I would say, limited, and that's the ceiling. Really, it's the ceiling. Depending on how earnings go, how some of the major companies do, in this earnings time, you're going to see markets react, and markets react sharply. Don't be surprised if we see volatility go up. Don't be surprised if we see intraday price fluctuations go up this week, okay? Because this is a big week. Next week as well. But, we are in earnings season, okay? So I wish everyone to be safe. I hope you do well. I hope, you kind of operate within your risk tolerance. Do not chase stocks. Do not chase anything. I'll be very honest right now. When I was in this area, okay, let's kind of be very transparent here. I was buying stocks, okay? I was buying stocks here, and as I know I cleared the thing, but I was buying stocks here, so on and so forth, okay? And then I was, buying some around here and selling up as we go. And getting in and out, because once we hit this point, I started looking at more. I put my trader hat on. Right down here, I put my investor hat on, because you know what? If it's a great company and it's discounted to the level that I'm seeing, I'm buying this. I don't care if I have to hold a year or 2 years, whatever. But once the recovery happened much quicker than I even anticipated, then I started offloading some positions as we went up and started becoming a trader, because look, we want to try and make money off of ups and downs, and that's exactly what we're getting here, right? That's exactly what's been happening. The market since June to now is at the same spot. What does that tell you? It's a trading environment, right? So some environments are more investing environments, and some environments are better suited to trading. I utilize both. This is why you see me. If you follow me on social media, you'll see, I have my investment holdings, larger account. I also have other accounts that are for trading, right? More active trading, in and out, going long and short. I'm not talking about day trading, but swing trading. Okay, so here we are in the markets. Be cautious. I'll tell you right now, to give you an idea what my positions are like in my trading account, and I'm about 85%. Okay, 85% cash. Okay, I can't make it any clearer for you guys. Okay, I never tell people what to do, because they're not me, but I can only tell you with transparency and honesty what I'm doing, and then it's up to you to decide. So I am now, not now, but over the last couple months, been 80 to 85% cash. Okay, could I be wrong and wish I would have held, and because markets continue to go like this? Sure, but I don't care, because I don't operate that way. I've been doing this for too long to think, I wish this, I wish that. No, I'm making a decision based on what I'm seeing now, and I'm relaying that to you guys. I'm not saying you have to follow directly what I'm doing and have 85% cash in your portfolio or in your account. I'm just saying what I'm doing. With that said, I think I went through a lot. Hopefully it was informative. Again, I do want to thank you guys for coming on. Now, I think which is the most enjoyable part, especially for me, is the questions. I know some of you guys have asked questions, so let's address all those questions. Many of you have been waiting, so I don't want to disappoint. So let's address some of those questions. I do see a question here. How do we capture the increases in the market? Tech seems overvalued right now, but value stocks don't show much near-term improvements. Right, great question. So this is why I say, if you're looking to catch an increase in the markets via value companies, you need to have more of an investment philosophy. You need to have more of an investment approach, because like you said, they're going to take longer, right? If you want to look into some value-based companies, I still think Boeing has upside. Just be careful for short-term downside, right? I still think there's upside, but with 747 just piling on, Boeing has way too many 747s because many countries have not been buying them. Many countries have taken them out of their fleet. So Boeing has many 747s sitting around. I would not be surprised if we see a little bit of a drop in Boeing. At 160, again, don't take this as any investment advice. This isn't telling you what to buy, when to buy. I'm just giving my opinion. Around 160 area, I think Boeing is a great play. That's just one. There's plenty of good opportunity. Just be aware of some of them coming in with earnings. Okay, earnings is a big catalyst. It's a big question mark. So maybe you want to wait after. I don't know. It's up to you. I think AT&T is a great one. There's many good value-based companies. I think Cisco is great. 3M is great. Coca-Cola has more upside. Pfizer is one. So I'm hoping you're just jotting these things down because I don't give these kind of things free and easily. So, I mean, usually that's reserved for my elite members. But, there's some good upside in that. Disney is also some upside. My only concern is if we see, like in California and Florida, if we see further rollbacks in sort of lockdowns and whatnot, then guess what? Disney's going to be impacted as well. They also have earnings in next month. Right, so those are a couple of suggestions that I just dropped there right on the fly for you. Hopefully that answers your question. Someone's asked me, would I advise start investing now since I've already missed the ship? No, I would wait. You've already missed one of the biggest opportunities of the decade. For whatever reason, I don't want to make you feel bad, but you missed one of the best opportunities of the decade. Now, don't try and fix the past errors in a month. So don't chase. I would wait. If you know how to trade, learn how to trade. Take advantage of some short-term movements. Otherwise, pick some good value companies to maybe get in. Again, I'm not here to kind of tell you what to do, but I would wait. As for when I'm buying stocks, when I'm getting more bullish, that's going to depend on what happens with the markets. Right? That's like asking me, when am I going to go to the beach? A, when the weather is great, and B, when no one else is at the beach. Okay? All right. So, question, can I name a few growth stocks in mid-cap sector? No, I mean, that's not really, I don't really bother too much with mid-caps. I didn't come here with a list of stocks to feed people. So, I mean, you can look at that yourself. Someone asked me, what is the lowest amount to invest and what is the safest company stock for that low amount? I mean, a few $1,000s if you want to start with. You don't want to put it into one stock. The whole point is to A, know what you're doing, B, know what you're investing in, and then C, make sure it's suitable to your time frame and risk, right? There's no one good company. There just isn't. There's no one single company that has your name on it, okay? That's not the way you want to look at things. You're not on the board of the company. You're not a CEO. You're not the CFO. So you don't owe any allegiance to a company, and that company doesn't owe any allegiance to you. So you need to understand that not all investments are going to be right for you. Not all companies are right for you. There's going to be some that are. You just have to know what you're looking at, what is suitable to you. Okay. Any other questions for you guys? I want to make sure I have enough time and give you guys enough time to address any questions or concerns, whether it's a specific stock or whether it's general market related or anything. You can feel free to ask. I'm going to give it a little bit of time because I know some of these questions and comments come in a bit delayed, so I'll wait a bit. Microsoft, great company, done extraordinarily well. I would kind of maybe wait for a little bit more of a pullback. 200 is a great area. Again, we've seen some tech pullback, right? We've seen this theme now with a rotation out of tech. If you follow me on social media, I said there could potentially be a rotation out of tech. If you don't know what that means, then you need to be an elite. You need to get training. You need to know what that means, okay? I can't help someone who can't help themselves, all right? So when I said there's a rotation out of tech last week, whether you listened or whether you saw it or not, here's what I'm talking about. You seeing this? Are you seeing this here? Okay? Netflix, obviously, we had a drop because of earnings, but are you seeing that theme? Okay? Are you seeing this theme here? Right? I can't make it any more clear for some of you guys. Sorry, not this. Right? Nvidia, a little bit of a pullback, great company. Okay, look at Shopify coming back down, right? So make of that what you will, all right? I did see a potential tech curling over to tech index and tech companies curling over, and I think that still stands. How that happens this week, we'll see, because a lot is going to depend on earnings, okay? Roku. Okay, someone's asking, okay, one sec, sorry. Someone asked me about dividends. Again, that's a different question. The question isn't worded too well, but I'm going to start from the top. Why am I holding 85% cash at this juncture? I explained that in the beginning of the webinar. I feel like the markets have gone up too much too quickly. I think the market isn't factoring in some of the negative catalysts where, maybe we have a worse second wave, maybe the death rates keep going up, right? That's going to impact. And if we don't get a good stimulus deal, if the Fed stops buying back assets, the market's going to factor that in. And where we are in terms of technicals, this is a big heavy resistance area. Okay. So Juan asked me about BABA. I'm not buying Chinese stocks. I'm not talking about Chinese stocks. I said that. It's fine if you didn't know, but I said that back in March, April. So no comment on those. Someone asked me about a dividend, but the question isn't clear, so I'm not going to answer that. Thoughts on Nokia? Do I think it's undervalued? So Nokia is a great example of a company that was once a leader and has just kind of done crappy ever since. This is not something I'm buying, whether it's 5G, 4G, 10G, 8G. I don't give a shit. It's not something that I'm really too interested in. I don't really care for these tiny companies. Nokia used to be an absolute juggernaut, and then what did they do with it? They did fuck all. 2018, they did fuck all, and they've never been the same. So I don't like those kind of companies. If I ask myself, I can manage it better. That's a shame. Okay. Netflix went down. What do I think about Roku? Okay, Roku, again, very much being clobbered every time it gets through that technical resistance area, especially 170. I think 170 is a big sell area if people are holding that. For now, I think there may be more downside to Roku. Okay, I'm not a big fan of this. It's a good company in terms of revenue growth, in terms of addressable market, in terms of kind of their growth metrics, but am I buying it right now with where the company is? Kind of like look at this, right? TradingView has some amazing stuff now in terms of metrics, and you know what? They make no money. They have a 17 billion market cap. I think it's a bit too richly valued. Okay, someone's asking me RTX. RTX is great. In fact, I actually hold some. I hold some RTX. I bought some last week or the week prior. I can't remember. I'm holding this. So I have some defense companies. Okay. So yeah, that's my thing. Yes, and someone's asking, better to use option contracts or swing trades for earnings YOLOs. It's up to you how you do it. If you're using options for earnings plays, just know that the entire amount is at risk. So if the contract is $2, $200, just know that whatever happens, you could lose your entire $200. If you're okay with that, then go ahead, take that gamble, right? Someone asked me thoughts on Tesla. Where do I even start with this? Since March, this fucking thing has moved up. I'm not even gonna count when it went to nearly 1,800, but 317%, overvalued as fuck. Makes no money. This company makes no money. A lemonade stand run by a 10-year-old makes more money than Tesla does. End of story. Okay. Thoughts on NCNO? What is that? What? Yeah, I don't know. Honestly, this is like there's barely any data. I can't speak on this. I haven't looked at it. Teradyne, again, I'm not gonna be really getting into some of these kind of plays that are really, really overbought, overdone. Keep in mind they have earnings coming up, so it could go anywhere. Right? There's no point in me trying to speculate on a question mark, right? Yeah, so Nick asked a good question about REITs. Finally, a good question. So depends which one, right? So, right, depends which one you're looking at, right? Are you considering, commercial REITs? Are you considering residential REITs? Because that will make a difference, right? The type of REITs that you look at and the sectors that you're in the REIT sector, I would say the industries you're in the REIT sector will make a difference. I like REITs. There's some great REITs out there. I'm in Canada, so I'm more prevalent in and well versed in Canadian REITs. So there's some great Canadian ones I hold. But really, it all comes down to what kind of industry within the REIT sector you're looking for. You're looking for commercial. I wouldn't bother with mortgage REITs right now, but if you're looking for solid companies with good payout ratios, not over leveraged, the payout ratio isn't crazy, then yes, REITs are good. BPY, RioCan, yes, great. BPY is good. RioCan is fine. Consider Dream. Okay, D.UN. Dream Office REIT, okay, beaten down but still has upside. There's HR.UN, okay, consider that as well. There's Canadian Apartment REIT, CAR, that's one of the leaders for residential. I mean, people will need residential REITs. So yes, I can't fault you for REITs. I like REITs, especially ones that are very good financially, have great management, and have good metrics. Okay, someone's asking me XMC mid-cap index. Sure. I mean, if that's what you want to have exposure to and you don't want to pick a specific company, then yeah, great. Go for that. Not my cup of tea personally. Okay. Great questions so far, especially the REIT one. Lyft. Yeah, so I'm not a big fan of the ride-sharing companies. Good question. I think it does have some upside. Can it get to 60? Maybe, maybe not. How this earning goes in August will make a big difference. I'm not bullish on them. I personally, if it's a trade for you, then obviously if it's near your stop loss or if it's gone way too far below where you want it to be, then I would exit. But if it's an investment and a speculative investment, it's not too large as per your portfolio, I mean, then you can continue to hold it. As far as if it ever gets back to your break even, who knows? I wouldn't be surprised if it doesn't for the next year, two, ever, right? If it does, great. That's something really up to you. But right now, technicals do not look too good. Same story with Uber. If someone has that, right? Uber and Lyft are the two main ones. I'm not very, very bullish on any of these. Way too much debt. The kind of ride sharing market has obviously been impacted quite a bit. Since Corona, and I don't really like some of the massive amount of spending that these companies do, and they have to. They have no idea, right? Apple is huge. Love Apple, great company, but I'll tell you what, Apple is one of my favorite companies, but I don't even own it right now anymore. I did over many years, over these past few years rally. But right now, I don't even own Apple. So what does that tell you? What does that tell you about the way I see markets and where I am? Am I completely out of markets? No. I'm still watching. I'm still trading. But I'm not holding things too much. I'm not carrying them too much, especially in my trading account. Okay? I'm waiting and seeing. I don't need to force trades. Okay? The biggest problem people have is they force trades, they try and do shit they don't need to. Half the problem with trading and markets is the person themselves, right? It's not the technicals and all the indicators you want to look at. That's all extra. But if the person themselves is their worst enemy and working against them, it doesn't matter how many indicators they have on screen. Doesn't matter how many screens they have, how much different subscription services they have, how much training they have. If they can't fix themselves and how they see markets, how they approach markets, it's all useless. Okay. IPR. Someone's asked me IPR at US REITs. I haven't, what the fuck? Imperial Resources? Or is that an index? Either way, I don't know what the fuck that is, but either way, any final, IIPR, there's another I there. Sorry. What is this? Industrial, not bad. I'd have to look at the metrics, but ultimately, if you feel like this is something that you believe in, industrial REITs are actually pretty solid. Again, it's It's very, very specific to the company. But industrial REITs are relatively solid. I think if you have an idea of what you're investing in, great, right? We just keep in mind it has earnings coming up in August. Someone's asking me about SPG. Do I see it hitting 52-week low? No, I don't see it coming back to 52-week low unless we see a rapid reversal in the reopening stuff, right, on a state-to-state basis, right? SPG has a great portfolio of different, let's say, investments, right? Different types of I would say, clients that rent the property, leased property from them, but a lot of it is exposed to malls and these kind of things, right? So obviously SPG has kind of fallen off a cliff when we saw the lockdowns happen, right? It made a little bit of a recovery, but since then it's kind of teetering along. Do I think we see 52-week lows? Maybe not, unless we see a sharp reversal in reopenings. Then I wouldn't be surprised. Then all bets are off. Okay. Pod industry. Nice. Okay. So yeah, I mean, that's not really my IIPR. It's not really my cup of tea. But sure, if someone is well aware of what they're doing and it's suitable to them, sure. That's not something I hold or invest in or monitor. All right. So it's been a great session, guys. I think that might be the last bit of questions. I don't see anything coming in yet. So again, I appreciate you guys getting on. Hopefully it's been informative. Hopefully you like this. If there's enough people that like these kind of lives, we do weekly webinars for our elite members, but I decided to do one again after, I think it's been 3 months. I think it's been 3 months since I last did one, right? Back in April. Right, so wow, a lot has changed. Time has flown by, but guess what? The world still isn't back to the way it was, in January, February. So, it's my hope that all of you guys are well. I thank you for coming down. I thank you for your support, for following, for subscribing. Please subscribe. It's if you are looking to get into markets, if you're looking to learn how to trade and trade well, then you should know that there's a lot of resources, a lot of different things that I provide. So definitely check it out. If you have questions, always reach out to me. We'll be doing a big discount, big sale on the stock trading masterclass this week. So keep it locked. It'll be for my birthday. So these kind of sales don't come around often, but I figured to celebrate. I do a massive discount on it. I don't do discounts on the stock trading masterclass often at all. But I figured, okay, let's do it. Let's do it this time. And stay tuned for that. More information on that. That will be coming in. And let's stay in touch. We'll see how things go this week. Big week in earnings this week and next week as well. Keep it locked. Subscribe. I appreciate all you guys coming on. Take care. Ciao, guys.